So what if I told you that the entire AI boom, everything from the bleeding edge chips to critical medical tech, all hinges on a gas we usually just see in party balloons? Welcome to The Explainer. Today we're pulling back the curtain on a looming crisis around helium, and we're going to look at what happens when its supply chain suddenly gets shattered. The answer here might really surprise you. It's not silicon, it's not some fancy rare earth metal. Nope. It's a gas with properties so wild it's literally the coldest liquid on Earth and a perfect conductor of heat that for many things it's just irreplaceable. We're talking about helium. All right, let's get into it. First, we'll cover why helium is basically the secret ingredient in high tech. Then, we're going to run a simulation of a major supply chain collapse. From there, we'll see how that exposes a fatal flaw for the big semiconductor giants. And most importantly, we'll map out the investment landscape, pinpointing the potential winners, and just as crucial, the dangerous traps every retail investor needs to know about. So what is it that makes helium so special? I mean, beyond just making balloons float. We're talking about a substance whose unique physical properties make it absolutely fundamental for the technology that runs our world. Let's break down exactly what those are. And these aren't just some abstract numbers on a science test. Having the lowest boiling point means it can get things colder than anything else, which is essential for things like MRI machines and quantum computers to even work. And because it has high thermal conductivity, it can whisk heat away from a sensitive process with incredible efficiency. These extreme properties are exactly why it's so indispensable. And this slide really shows you just how vital it is. In a semiconductor factory, when you're etching circuits that are just nanometers wide, you generate a ton of heat. Helium is the only thing that can pull that heat away instantly without messing up the chemistry of the delicate chip. Without it, you just can't reliably make the high bandwidth memory, or HBM, that powers all the top AI accelerators. So yeah, from AI to MRIs, helium is the silent hero. Okay, so we've got this steady, critical demand for helium. But the problem is it's running headfirst into an incredibly fragile supply chain. And to really understand how fragile we're talking, let's run through a simulation. Just imagine this scenario unfolding in, say, the year 2026. Now, this chart right here shows a huge vulnerability. Yeah, the US is the biggest producer, but look at Qatar. It controls almost a third of the entire world's supply. And here's the kicker. Every last drop of that helium from Qatar has to pass through the Strait of Hormuz, one of the most volatile, politically sensitive choke points on the entire planet. This is the absolute nightmare scenario. A regional conflict kicks off. Iran, in response, shuts down the Strait of Hormuz. Then a strike hits Qatar's main gas facility. That's the final blow. The state energy company declares force majeure, which is basically a legal way of saying, hey, something totally out of our control happens, so we can't fulfill our contracts. And just like that, boom, a third of the world's helium supply is gone, off the market overnight. The gridlock is immediate. It's total. Shipping through the strait just plummets by 85%. All those special, super expensive cryogenic containers you need to move liquid helium, they're now just stranded. Insurance costs go through the roof and the whole supply chain just freezes solid. We'd see the spot price for helium jump by 35 to 50% in less than a week. Now, a global crisis like this doesn't hit everyone the same way. It has a direct and, frankly, devastating impact on South Korea's most important industry, which just happens to be the engine room for the global memory chip market. This is what you'd call a double whammy. The crisis doesn't just cut off nearly 2/3 of Korea's helium supply from Qatar. It also threatens its supply of bromine, another key chemical for chipmaking, because almost all of it comes from Israel, which would be right in the middle of the conflict. It's like a perfect storm hitting Korea's semiconductor supply chain from two sides at once. Okay, so you're probably thinking, well, can't they just recycle it? And yeah, that's a great point. Companies like Samsung and SK Hynix are working on some pretty advanced recycling tech. But here's the reality check. Samsung's current system can recycle about 19% of the helium it needs. That's fantastic for efficiency and saving costs, but it's not even close to enough to cover a sudden 65% cut in supply. So here's the bottom line on that. Recycling is kind of like improving your car's fuel efficiency. It's a really smart thing to do. It saves you money, it's good for the long haul, but it doesn't help you one bit when the gas station itself is completely empty. Recycling is a buffer. It's not a substitute for the raw supply. All right, so a crisis on this scale creates massive opportunities. And let's be honest, some really dangerous traps for investors. So let's actually break down the investment landscape and see who really stands to benefit and whose stock might just get crushed. This table basically gives us a map of the key players. You've got your huge global gas companies like Linde, but their supply chains are so massive and complex that they're actually exposed to this disruption, which really limits their upside. Then you've got the purely speculative theme stocks that you have to avoid. The real opportunity seems to be with companies that are safe from the geopolitics and have direct exposure to the rising price of helium. So who are the big winners here? Well, it's the North American pure play companies. These are the smaller, more focused explorers and producers that are totally insulated from everything happening in the Middle East. You've got Pulsar Helium, for example, which made this incredible discovery in Minnesota of 14.5% concentration helium. I mean, that's almost unheard of. Plus the super valuable helium-3 isotope. Then there's Desert Mountain Energy, which has already gone from exploration to actually selling helium commercially. These guys benefit directly from every single dollar that the price of helium goes up. Okay, now let's flip back to the domestic angle in Korea. A company like TEMC becomes a huge strategic winner. They don't find helium, they recycle it. When a crisis like this hits, it forces the Korean chip giants to desperately secure their supply chains and cut their foreign dependency. All of a sudden, TEMC's technology goes from being a nice cost-saving measure to being a mission-critical part of the entire production line. That deep integration gives them a massive competitive advantage. But, with big opportunities come even bigger dangers. Let's take a hard look at a company that might pop up on an investor's radar as a helium stock, but is, when you dig in, a really serious trap that could completely wipe you out. This is a direct quote from a short seller report, and wow, it is absolutely brutal. It's alleging that the CEO has a long history of running companies where, on average, shareholders have lost almost everything. I mean, that is a gigantic red flag before we even get into the business itself. And the company's history, it shows a really clear pattern. It started out as New Era Helium, but that basically failed. So in 2025, what did they do? They pivoted. They changed their name to New Era Energy and Digital to jump on the hot AI data center trend. Right after that, bam, the short report hits, and then they get sued by the state of New Mexico for alleged environmental fraud. This doesn't look like a turnaround story. It looks like a history of failure and questionable pivots. And here it is, the bottom line. Despite its old name, this company has exactly zero exposure to the helium market. It makes no money from helium. It can't possibly benefit if helium prices go to the moon. The name is just a ghost from its past that has nothing to do with its current business. And the financials, they just paint a really ugly picture. Its Altman Z-score, which is a formula that predicts bankruptcy, is at negative 4.37. That signals a very, very high risk. The company is known for diluting shareholders. It has this huge new convertible note, which is basically debt that can turn into more shares and water down your stake. And it's gotten repeated warnings from NASDAQ about being delisted. These are all the classic signs of a company in a death spiral. Okay, so we've walked through the crisis, the weak spots in the supply chain, and the whole investment landscape. How do we put all this together into a smart strategy for you, the retail investor? The strategy is actually pretty clear. First, avoid the traps. That means staying far away from these deceptive theme stocks like NUAI, and also the industrial giants that are just too big and exposed to really benefit. Instead, you focus on the pure plays, the North American producers with safe, direct exposure to rising helium prices. And then you consider the wider ecosystem, like the recycling champs that become absolutely critical when supply chains get shaky. The trick is to look past the hype and focus on companies with a direct, secure, and profitable business model. And of course, please remember that this is all for educational purposes. It is not investment advice. You have to do your own research before making any decisions. We'll leave you with this final thought. If the entire AI boom can be put at risk by a shortage of party balloon gas, what other invisible dependencies are lurking just below the surface of our global supply chains?